Okay, for our next video lecture, so this is about Module 3. So our topic is the different types of audit. Okay, so before we start with the discussion proper, let us have a short overview of the contents of this module. So this module will discuss the different types of audits that is being performed depending on the organization, their needs, who will use the information as a result of the audit. The different types of auditors are also discussed and are distinguished from each other. So for the learning outcomes, at the end of this module, you will understand and be familiarized with the different types of audits, identify and describe the types of audits, and be familiarized and able to identify the different types of auditors. Okay, for the content, so we have here the following types of audit, and lastly will be the different types of auditor. Okay, so to begin with, let us start with financial statement audit. Okay, so when we say financial statement audit, this is the examination of an entity's financial statements and accompanying disclosures by an independent auditor. So in this case, this is what we are talking about in our previous module about auditing. So the subject matter will be the financial statements of the entity. Okay, so this is exactly what we mean by FS audit. So the result of this examination will be reported by the auditor in his auditor's report, attesting to the fairness of the presentation of the FS and its related disclosures. Okay, so the financial statements will be evaluated, okay, by the auditor using an appropriate criteria, which is in this case PFRS or other framework that may be appropriate. Okay, so the auditor's report must accompany the FS when they are issued to the intended recipient. Okay, so this is very important because the purpose of audit or assurance engagement is to enhance the credibility of the financial statements as well as the confidence of those who will be using the FS for their decision making. That's why it is very important that the FS that will be issued to the intended users, for example, the shareholders, should be attached. Okay, the auditor's report should be attached in that FS. So the purpose of FS audit is to add, of course, as mentioned, credibility to the reported financial position and performance of the business. And SEC also, as mentioned in our introductory part, they require that all entities or corporation registered, especially those which are publicly held, must file their annual reports with it that are audited. Okay, so if you could still remember, okay, aside from SEC, BIR also requires those which has gross annual sales or revenues of 3 million and above for their financial statements to be audited in order for them to be accepted to file on such agency. So lenders also, they typically require an audit of FS, okay, to which they lend funds. So what is the purpose? Of course, they will use the FS to evaluate the creditworthiness of the entity. So for them to be confident that they will lend money to that entity, so they should provide audited financial statements. What about for the suppliers? So they can also require audited FS before they will be willing to extend trade credit. So they have the same intention, okay, with that of the lenders, okay, in requiring audited FS before they would extend credit to the entity. Okay. So audits have become increasingly common as the complexity of the accounting frameworks, the GAAP, and IFRS have increased, and because there also have been ongoing series of disclosures, especially for the fraudulent reporting by major companies. So this is very important because our framework or standards have been they are continuing to improve the standards. So from time to time, there is updates or revision or additions to the previous standards, which needs to be recognized and followed by the entity. So in order for the authority, okay, to determine whether these entities did follow the new guidelines, so it has to be audited, especially their financial statements. And aside from that, audit has become increasingly demanded, okay, by the public because of the scandals of the major companies, okay, that involves uh, financial uh, what you call this, in did they report their financial statements not that are not fairly presented because they want to get something out from the investors. Okay, so and the fact that they are major companies, the effect therefore is great, especially in the economy. So in the past years, I think you have heard about these major companies, okay, which involved in financial scandals. Okay, so therefore, because of that, audit or auditing now has become demanded. Okay, before the financial statement should be issued to the intended users. Okay, so the next type of audit is operational audit. Okay, so here, when we say operational audit, this is the examination of the manner in which the organization conducts their business. Basically, we are talking about their performance operationally. So the objective of this is to point out improvements that will increase their efficiency and effectiveness. Okay, so this type of audit is substantially different from the normal audit because the objective here is to examine the adequacy of their internal controls and to evaluate the fairness of presentation as well, okay, of their financial statement. So here, the objective is to examine the effectiveness of their internal controls, which will then relate to the quality of their operations. And at the same time, their presentation of financial statements will also be included. Okay. So the operational audits, this is usually conducted by the internal auditors. So this is not something that is performed by an individual practitioner. So this audit is performed by the employee of the entity as well. So this is their internal control staff. So those specialists can also be hired to conduct this, but more likely or mostly it is done by the internal auditors. So the primary users of the audit or the report recommendations are the management and especially the managers for those areas that have been reviewed. So the purpose of this operational audit is to improve the efficiency and effectiveness of their internal operations. Okay, so unlike the financial statement audit that is used by the outside users, such as stockholders, suppliers, and lenders for their decision making. So that's how different financial statement audit with this operational audit. Okay, so the Institute of Internal Auditor, or IIA, they define operational audit as a systematic process of evaluating an organization's effectiveness, efficiency, and economy of operations under the management control and reporting to the appropriate persons the results of the evaluation along with recommendations for improvement. So the management and performance audits are considered as part of our operational audit. Okay, so again, the purpose of the report is to provide recommendation for the improvement of a particular department or segment of an organization in terms of their operations. So when we say performance audit, okay, this is again a type of operational audit. So this is an independent assessment of an entity's operations to determine the specific programs or functions if they are working as intended, okay, to achieve their goals. Performance audits are typically associated with government agencies at all levels, as most government bodies receive funding. Okay, so performance audit in terms of using the budget. So here, normally there is a pre-established goals stated. Normally or preferably, it will be stated in terms of amount or something that can be quantified or measured, and then the auditor will compare the actual performance of that segment with that of the established goals if they did follow and achieve such. Okay, so this is how performance audit is being done. So if there are any deviations, okay, so measures of mitigating the negative impact and capitalizing on the positive ones will be recommended in the report. Okay, so under the operational audit, we have 3 E's. Okay, so the first E is effectiveness. So we have mentioned this a while ago in the definition of operational audit. So effectiveness refers to whether an entity or a unit of an entity success is actually achieving its goals and objectives. So it also means getting expected results from the output. So meaning whatever they have established, they achieved it. Okay, so that's how being effective is. So if this is the objective of the operational audit, then the appropriate criteria must be established so that there would be something that they can refer to, okay, in the evaluation. So this requires careful consideration of the purpose of the organization to ensure that the criteria actually relate to the primary purpose rather than some other matters. So here, the criteria should also be evaluated if that is suitable. Okay, so they have to make sure that this is suitable with the type of objective that they want to achieve. Okay, so the second E is efficiency. So this refers to how well an entity uses its resources to achieve its goals. So this means of using the resources such that output is optimized for any given set of resources or the inputs, or that input is minimized for any given quantity or output. Or in simple words, when we say efficiency, this is using a small amount of input and generating more output. That is what we mean by efficiency. Although you have given small or limited resources, you are able to produce more. Okay, that's how efficiency is. Okay, and the third E is economy. So this refers to the acquisition of the appropriate quality and quantity of resources. okay, of the appropriate quality and quantity, or at the appropriate times and at the lowest cost. Okay, so economy means getting the right inputs at the lowest cost or getting a good deal. So here, although economy actually relates to both effectiveness and efficiency, but under the operational audit, when we say economy, this is minimizing the cost of the input that we get, okay, in order for us to probably maximize the profit that will result into efficiency as well and effectiveness. Okay, so here they refer it as the acquisition of the resources that the right or the appropriate quality and quantity but with the lowest cost. That's how economy is. Okay, so again, we can relate economy to the efficiency as well. Okay, so the categories of operational audit. So first we have the functional audit. So this is the audit that examines a particular operation within the organization, such as procedures followed for cash payments. Okay, this is an example made by the accounting department. So meaning the auditor will determine if the function described for a particular department is really followed and the work is done according to their task description. Okay, so that's how functional audit is performed. So this may also extend to the procedures that is followed for approval of the introduction of a new product or process. So this is another example for the functional audit. Okay, so this type of audit will examine also whether the function is performed economically, efficiently, and effectively. Okay, and this is important to include also their interrelated functions because to omit them may result in misleading results. Okay, so we all know that although the department functions in their own authority, but there are still other interrelated functions that they do. Okay, so this should also be included under the functional audit. Okay, another is organizational audit. So here, this refers to the audit that reviews the organizational structure of the entity. So it may be a department or division or even a subsidiary. So the emphasis of this examination is to determine how efficient and effective is the organization operates, especially when considering their interaction with the different functions. So here, flow charts of information and organizational plans will be the interest of the auditor. Okay, so how their functions as management, manager, board of director, how do they do their function, okay, as well as their interrelations or interactions with their subordinates. Okay, so that's how organizational audit is performed. Okay, and another is special assignments. So this may be commissioned by the management for a whole variety of special reasons. So this may include investigation of possible fraud or poor procedures that will allow misappropriation of company property. So special assignments will be performed because the management has a specific purpose of determining something like fraud or poor procedures which needs to be addressed immediately. Okay, so that's why special assignments are being conducted. Okay, so those are for the operational audit.